Well, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon, welcome to GrainTV. It's January 7th, 2014. I'm Logan Burgess. To my right here is Cody Bills to help break down a mixed trade day in Chicago on a Thursday. Jumping into the quotes, we see corn up 2 1/4, soybeans off 3 cents, Chicago wheat up 5, Kansas City wheat up 9 cents. Big news out early this session, Cody, was the export sales report. What did we see there? Did it do anything to support corn?
Well, you know, when we take a look at the export sales, you'll notice that we saw export sales for corn around 821,000 metric tons. Beans came out at 1.2 million metric tons, and that was very positive. That was on the higher side of analyst expectations. About 701,000 was for the old crop beans. But if you look at wheat, we were at 401,000 metric tons. That was positive. All in all, I think these were relatively positive. The only negative today is we saw an additional report from FAST that 168,000 metric tons of corn was canceled. Yeah. I think that has a lot to do with China continuing to reject corn at their ports. Yeah. And for soybeans, we actually had relatively positive news with a sale over 100,000 metric tons having to be reported. This is in addition to the export sales report. And we saw 465,000 metric tons sold, and 60,000 of that was for this old crop. So the bottom line here, I think that was relatively supportive, yet the price action for soybeans, we ended up closing in the negatives here. That's very interesting.
Yeah, you know, let's quickly recap the numbers that we saw yesterday from NOPA. As you said, Cody, today, relatively supportive export sales for soybeans. And take a look here at this slide, just a reminder of what we saw yesterday. Exceptionally large December crush reported yesterday from NOPA, about 2 million bushels higher than what the trade was expecting. We saw a pretty strong reaction yesterday in the trade, but in today's trade, we saw the market really take off early in the session, but then close relatively hard, down 3 cents. Seems like the reaction that we saw today is a little bit of cause for concern for the bulls out there.
Yeah, absolutely. When you look at the chart here, you'll notice that we were able to trade higher in the morning, and then by the end we ended up trading down low. And I think the problem here, because we were in the negative, I think that we're starting to run out. We're running out of steam. I mean, we've really reacted very positively from the WASDE report. Right. That continued as going in with anticipation to the NOPA numbers. The fact that the NOPA numbers came out, they were bullish, and we traded higher this morning and then ended up closing in the negative. I think that's cause for concern that maybe we're running out of steam. Maybe we had a situation of buy the rumor, sell the fact here, and now I think there is a possibility if we close below today's lows, and with some conviction, I think that we could see some contraction here in soybeans. I wouldn't be surprised if we saw some selling in the days to come.
Yeah, it could make for an interesting trade day here tomorrow on Friday. As you said, Cody, we'll have to see if the market does snap back a little bit. We know that the close today was right around some important technical levels for the March contract. But as you said, I think if we see a strong close below today's lows, we could be seeing some long liquidation going into the weekend. We'll have to see though tomorrow in tomorrow's trade action. Thanks a lot for joining us here on GrainTV on a Thursday. We'll be back here tomorrow to break it down again.